Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for August 6th through the 10th. We're going to go over last week's changes here. You can see quickly right there, everything was basically green. This week we're going to go over our four main indexes. We're going to take a look at emerging markets, what affected the stock market here on Friday to take a dip. So there's an article that we're going to cover. I'll have that in the description below as well. We're going to take a look at my week's changes for the week. My changes for the week as far as my portfolio goes in comparison to the markets. Take a look at some stocks that we covered over on Facebook. Some companies wanting to go private, others missing earnings, and some having some gloomy expectations of the next couple quarters to come as far as real estate goes. Then go into our four stocks that we covered with ExDividend coming up next week, and then ending it right there talking about oil, US dollar, silver, gold, bonds, and the housing construction. So that's what's in store this week. If you guys do like the video, give it a thumbs up. Last week we had 8 thumbs up. If we can get 10 this week, that would be amazing. And of course, if you are brand new to the channel, go ahead and hit the subscribe button. So as you know, last week everything went up very nicely. Even the Dow Jones, they had a bit of a rough week, up 0.05, but you have to think Apple beat earnings, jumped up, what, 8%. So the Dow Jones moving up 0.05% when Apple itself moved up by such a large amount. There's some issues there within the Dow. Steel and aluminum companies, Caterpillar, and a few others are getting kind of hammered, Boeing and such. So let's go ahead and take a look at this week's changes for the week. S&P 500 down 0.25, mainly on Friday, which we'll discuss here in just a second. Year to date up 5.97%. The Dow Jones also down 0.59%. Took a huge hit here on Friday, going down 0.77%. Year to date still green, which is important, up 2.4%. The NASDAQ here is our positive. I believe the Russell as well. So 5-day change here for the NASDAQ up 0.35%. Friday took a hit as well, 0.67%. Year to date is in the lead, up 13.55%. And the Russell here also positive, 0.8%. This is actually our leader for the week, but they also took a slight hit, even though they're nationally, mainly national stocks. They did take a hit here on Friday just because I think investors began to kind of worry a little bit, but we'll see. Up 9.85%. And then the one here that I don't usually track, but I thought this would be interesting. This is the Emerging Market ETF, ticker symbol EEM. This one took a huge hit on Friday, down 2.15%. 5-day change down 2.31%. Year to date down 8.34%. So the emerging markets are these markets throughout the world, not US, that have been getting kind of hammered lately. So what's been going on lately? Well, rates have been rising. US dollars actually getting stronger. Here is an article about Turkey's currency crash puts economy at the heart of the election. So essentially what happened was a couple years ago, the US dollar was very cheap. Inflation was low. We had interest rates super low. These companies here in these emerging markets took out loans. They borrowed from the central bank. When the dollar used to be cheap. Interest rates were low. They were borrowing at this nice, healthy, 5-7% for emerging markets. Here you could borrow 1 to 3%, but overseas, with the emerging markets, you'd borrow at say a 4 to 8%. Well, what's going on right now? The central bank, the Fed, are raising rates. The dollar is getting stronger, but it's getting suppressed slightly by people buying bonds, or something is buying those bonds, keeping the yield down, pushing it down, pushing the dollar down. And the Fed's also raising these rates here, but the dollar wants to get stronger. They want to raise rates. They want to make the economy here stronger. They want to make it more expensive, and that's going to hammer a lot of these companies here that have taken out debt. And central bank here has raised interest rates by nearly 18% in the bid. So it's hurting these economies, and that's what's hurting these emerging markets. And that's what kind of affected here on Friday. So I'll have this link in the description below. So the Turkey economy, they're trying to get stronger, but debt is getting very expensive to hold. So I'll have this link in the description below. I want to kind of move on, but you guys can check that out if you guys are interested in taking a look at the emerging markets and how it could affect the US and such. So this week's changes, I didn't put it in here, of course. So August 6th through, it was the 10th, were negative. So this week I did move negative here by basically $100. I went down 0.39%. After the last few weeks, it's completely expected. I was wanting kind of a pullback, but Friday, it was kind of unexpected to have that kind of toss in there. So last time we had any sort of down movement was just a few weeks ago, back on 2018 through 22 June. So since then, the portfolio itself has moved up. I know it's moved up by a very healthy amount, nearly 7% or more. So here, 7.89%. So my total portfolio has moved up nearly 8% just here within the last few weeks. So very good changes. I expect, everything's going to kind of move forward here, but that's where we're taking a look here at stock futures. So right now, futures are in the negative. Going into Monday, you can see some great entry positions. This is why I like to buy on Monday. If you don't know, over on M1 Finance, I have my scheduled allotment of only $10, but it's money going into the market, buying up some cheap shares, buying into my portfolio, averaging down, lower my unit cost. Monday is a great day to do this. News comes out on Friday. It affects it until Monday. Monday market prices get suppressed. Great buying opportunity here. So S&P 500, NASDAQ, Dow Jones expected here down a half a point. Now some stocks around the news this week were Tesla. Tesla came out on Tuesday, in a Twitter announcement saying, hey, I want to take the company private at $420. This company, or the stock was highly affected by that, going up nearly 11%. I know a couple other investors here on YouTube and on Facebook groups sold off their positions on this announcement, not wanting to hold Tesla as a private company. Right now, he's been boasting his company, saying that, hey, we met this Tesla 3 production. We're going forward. We're going to be profitable every quarter from now. We are, what else did he mention? Our company overseas is going to be great. All these words, and kind of boasting his company week after week after week, just going higher and higher and higher. And now he wants to take it private. So when you go private, you don't have to share a lot of your balance sheet. You don't have to share your numbers. A lot of the information is much harder to pull and research as an investor. So a lot of it, who knows if he's going forward, if it's actually going to be in that, if he's going to stay in the zone, basically. So here, quick article, Elon Musk announced his proposal to take Tesla private, but no final decision has been made. So at $420, he would like to take Tesla private. A lot of investors are kind of mixed in this. Some are really for it, wanting to continue to hold Tesla into this sort of becoming privatized. That's how his SpaceX program is. They have special investors that can invest every 6 months. If investors want to sell off, other investors can kind of move in. So I'll have this link in the description as well. Disney here, Mr. Earnings, Mr. Revenue here on Wednesday, moving down for the week by 1.24%. Year to date, still positive, 4.81. This one's had a bit of a rough the last 3 months, but if you had bought this stock back in that May-April timeframe, you would be set. This stock had actually fallen to that $98, $99 point. I know a lot of investors are jumping into the stock at that $98, $99 point over on the Facebook dividend groups. They were jumping into the stock. They saw that Disney, they're buying up, what was it, Time Warner or Fox, one of them, to get their assets. But they're going to have more new lines of products, new lines of movies. They're going to go for their streaming service. I think that's going to be really well, especially if they can target kids on the applications. They have the Mickey Mouse Club and all sorts of other stuff. My kid watches it. He's 3. He likes to watch Mickey Mouse. So I think if Disney kind of does this correctly, I think they can generate a new stream of revenue and pull it out here for the future. Here's the article talking about Disney's miss. So here they were expected, they came in at $1.87 per share. Their revenue was $15.23 billion. They actually missed it here slightly. Expectations were at $1.95, so missed it there by 8 cents, and then their revenue was at 15.34, so did miss it there slightly. Revenue was up 7% from a year ago, so still, they missed expectations, but their revenue was still up nearly 7%. So I think that's still a win for them. I don't think you're going to see Disney fall into that dollar or that $100 point anymore. I think from this point on, if you buy below 110, I think you're going to get a lucky break. So if you're looking to buy into Disney, this could be a great opportunity. If you see it at $1.10, $1.12, 110, 112, I think that's a great buying opportunity kind of moving forward. But let me know in the comment section below. Are you guys interested in picking up Disney or whole Disney? And now moving into Zillow and Redfin. So Zillow down 14.92% this week. Year to date still positive by 19.7. Now it's unfortunate that Redfin actually is getting hammered here. Redfin down 23.7%, down for the year 42.66%. So what happened with Zillow? Well, they came out announcing that they're going to be buying up some mortgage lender companies. They also discussed that they're going to be doing more of their, what's it called? Their offer program, where when you want to decide to list a house with them, they will give you an offer on your property. And what sellers have been doing is they take this offer, not they don't accept it, but they look at the offer that Zillow gives them, and then bumps like an additional $5,000 on top of it, and says, hey, anybody want to buy this for a little bit more? And then they're kind of using Zillow's estimates to price their own homes. And now Zillow wants to get into this online mortgage lender where they're able to lend money out for people doing their refinancing and mortgages. And I believe they were talking about wholesaling as well, not wholesaling themselves, but with that whole program where they offer you, if they buy your home, they'll rehab it to market value and then sell it off. That's very risky to do those fix and flips, especially in a uncertain economy where prices on houses can go from 256,000 to 250,000 very quickly. That's a 5-10% drop right there. So very risky. If you're an investor right now, I just did a number on this on my Facebook group, but every year, generally people get a 2 to 3% raise. So over the last 2 years, that's a 6% raise. If you are making $50,000, you're now making $52,000. You're now making $55,000. Well, that is only a difference of roughly 8% between those difference, the 2-year periods. And if you look at prices of homes between 2016 and 2018, these current times, housing prices have gone up by 30% just within these last 2 years. And the mortgage rates, interest rates have caused mortgages to also cost nearly 30% more. So I would say, in my estimates, you always got to add appreciation. It's not, what is it? It's a 22% difference between the increases that you would normally get for your raises. And I can't think of the number. I'm just going to go ahead and keep going because I don't want to sit here and discuss these crazy numbers that are in my head, but I can't spit them out. So so Zillow came down because investors didn't want or like this whole online mortgage lender and then their whole offer program. Redfin dropped because while they did beat expectations, they beat their earnings, they beat their revenue. Going forward, the CEO came out saying that, hey, we are casting some doubts, saying that the market is slowing. We see a significant slowdown. We're going to go ahead and say that going forward, we're expecting our estimates to be lower, and kind of followed suit with that. So I don't know. Okay, so here it is. So CEO Redfin shares gains again, accelerated second quarter, but we also saw the first improvement. Not there. Where is it? Okay, so here, we expect U.S. home sales growth to slow and even perhaps reverse in August and September. Well, that's pretty expected. I would say that this is expected. If you talk to a realtor and you ask him, hey, what are the best dates to, where you're going to get the best prices, where you're going to get the best dates to sell your home, that's in that summertime. Kids are out of school. Parents have more free time. They don't have to worry about picking their kids up from school, taking them to school. They have a lot of free time, so that's when they're trying to move around. So right now, summertime is ending. People aren't going to be looking to move and buy and sell as much. So I can see the sales growth. I can see the sales offers and all that begin to kind of pull back here going into August and September. Interest rates are expected to rise again here in November, which could affect the buying power of a lot of buyers going in as well. Rates have gone up by 0.5%. A 0.25% difference in rates is a 5% loss of buying power. So when you go up by 0.5% over a year, that's a 10% loss of buying power. So instead of being able to buy a $200,000 home, you're only now able to qualify for, say, a $180,000, $175,000 home. And even those homes have also raised. So that $125,000, $145,000 home that's now worth $175,000, you're looking at it and you don't want it because you used to be able to afford something much better for the quality and such. So there's a little pullback there expected. So another little article. I'll have these in the description below. So stocks that we talked about with ExDividends next week, we had Picard. This was an automotive seller. I believe it was. They have ExDividend here going in on 8/13. That is next Monday. So if you did buy the stock, it is down here for the week by 1.35%. Maybe you could have bought it on Friday. Let me know in the comment section below. This is one of them that had rising revenue, net income, free cash flow. It has been going up very nicely over the last few quarters. Our other stock that we discussed was Snap-on. This one was a tools manufacturer, so they develop tools and such. They've also done very well here. They have an ex-dividend on the 16th. That is next Thursday. You could still buy this one on Wednesday or prior. This one also has had really good revenue, net income, free cash flow over the last 5 and 10 years. I don't think any of the stocks that we had discussed during our stocks with ex-dividends actually were around value buys where their yield was trading above their. Oh, actually, I think we had a couple, but I don't remember off the top of my head. Here we have Cladteca Corp. Boy, I do not remember what they had did. Looks like they did have a bit of a tumble here, down Friday 2.18%, down for the week 4.48%. So they may have released some earnings there. So let's see here. Ended on June. Okay, now that's pretty old. So I'm not sure what caused their stock to kind of tumble there on Thursday, Friday. That would be something interesting to kind of take a look at there. But this was one of our stocks with ex-dividends coming up next week that we discussed. We had a latte as well, up 1.93% this week. Year to date up 3.87%, and they're also going ex-dividend on 8/14th, which is next Tuesday. So you can still buy this one on Monday or prior. And now going into home builders. Home builders, they got affected negatively probably by the announcement from Zillow and Redfin with decreasing offers, decreasing lenders, approval for lending, sales, and overall information there. So down negative 0.41% year to date, down I don't know where I got 4, down 11.14%. We have oil continuing to move down for the week, down 1.33%. I think June is behind us, so June was a great month here towards the end for oil. Since then, it has gone nowhere else but down. I know U.S. are implying more sanctions on Syria, I believe, and one other place. But oil getting affected here negatively, down 1.33%. U.S. dollar is getting stronger here, as we were discussing earlier. Here, dollar started off this week at $95 and 95.26. It is now 96.31. So dollar, as we talked about earlier with Turkey, the dollar is getting stronger. It's now at 96.27, up here for the week very nicely. And that also affects gold, silver, materials, and emerging markets. So here, silver down 0.62%. This one fell a ginormous amount. It was at $16 at the beginning of the year. Now it's trading at $14.50. So I don't know anybody buying silver and gold. I would never buy paper silver and gold trust. Silver and gold trust, they're nice to just look at them to see how, if the dollar performs well, you'll see that silver and gold will go down. But this is a paper asset. If you want physical stuff, go out and buy physical mints of silver and gold. Don't buy the paper stuff. this is how they are using it to kind of adjust and either drag it down or drag it up. So gold also down 0.2% for the week, 5-day change, and down for the year 7.25%. As the economy gets stronger, rates go higher, dollar gets stronger, you're going to see gold and silver suffer here. And of course, bonds, 5-day change up 0.28%. Interesting there. Year to date, still down 2.93%, but actually not too bad in comparison to all that's kind of going on. I think it's kind of interesting. I've seen a lot of people going back and forth whether it's worth it to invest in bonds or not worth it to invest in bonds. And that is basically all I wanted to discuss this week. We're at 20 minutes now, so I think we're going to wrap it up and we'll go ahead and end it there. So if you guys did like the video, remember, hit that thumbs up button below. We're going to try and go for 10 thumbs up, 10 likes or more. If you are a brand new subscriber, hit the subscribe button. If you did like the video, want to share it with your friends, hit the share. Share it over on Facebook with anybody that would like these weekly recaps. I'm going to go ahead and discuss kind of going forward the main stocks, one stock every week, post it over on Facebook, and then we'll discuss it here during our weekly recap. And then if there's any big announcements such as the Turkey collapse, which affect the markets here on Friday, we'll kind of discuss that as well. So thank you guys for tuning in. I will see you next time. And of course, friendly disclaimer, I'm not a financial advisor or tax professional. The information provided in my videos is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them, talking about some news that could affect your portfolio. Thank you guys for tuning in. I will see you next time. Bye-bye.